It's very hard to say how much of that huge and long-lasting currency trade has been unwound in such a short period of time. However, it seems reasonable to expect that a large part of it has been indeed unwound, given the violent move that we have seen since the mid of last week. However, that has been building up for decades, so to say. So it may well be still there and affecting capital market movements in the weeks and days to come, as eventually the Bank of Japan continues its normalization, although very cautiously, as the Vice President said. And that seems reasonable as an approach, given that Japanese data have been, not really that strong to justify a rush in jacking up interest rates. And on the other side of the pond, so to say, the Federal Reserve is increasingly likely to start eventually cutting rates at the next meeting in September, and there is now speculation about the size of the first move and the successive moves that will be most likely appropriate to take from the Federal Reserve to move the U.S. monetary policy to a more neutral stance, given that currently it looks clearly restrictive, and that seems to have eventually affected the economy.
If we continue to look at Japan, BOJ deputy governor had played down the chances of a near-term hike, but from the summary of opinions, there was at least one board member talking about 1%. How do you expect Japanese monetary policy to evolve?
Well, the direction of travel is clear. Interest rates will be raised further at the next meetings. The speed is likely to be, moderate, not only compared to other central banks, which normally move rates in steps of 25 basis points, as opposed to what the BOJ has been used to be doing over the last decades, but also because overall the macroeconomic conditions of the Japanese economy do not really justify a hastened tightening, as was, for instance, the case in many Western countries a couple of years ago. So the BOJ has the benefit of, taking cautious, gradual steps, and in the process find out when or where rather is the level of rates that start having an effect on the economy, something that the other central banks have been also experiencing, and most likely concluded that they have over-tightened a bit.
GianLuigi, what do you make, though, of the BOJ's moves in the last week? There's been some quarters criticising the BOJ for coming out with that meeting, with that speech, I should say, this week, saying that they're being kind of bullied by the market off the back of that turbulence and raising the issue of moral hazard. What do you think? Well,
that speech was, to some extent, was to be expected, because such a violent move is not in the wish of any central bank. Central banks would like to see, things developing very gradually and without much market volatility. And when that happens, as it was indeed the case, they need to step in and try to calm a bit the situation. And this is what they did. But eventually the message was not overall different from what emerged from the minutes, i.e. there is a need for, at least this is the opinion of the Bank of Japan, to normalize further the monetary policy stance, but that can be taken in a more gradual manner than markets seem to be expecting at the beginning of the week.